Welcome to Money Flow IQs, where smart money meets smart learning.
So earlier this week, Tesla dropped one of those classic, cryptic social media teases.
Oh, yeah, the spinning hubcap, the headlights.
Exactly. And the mainstream media it descended into this total frenzy of speculation. Was it the Roadster?
Yeah.
A huge price cut.
It was pretty chaotic, yeah. But honestly, if you've been tracking the company's statements, their strategic moves over the last year or so, the answer to what they're announcing, it's kind of hiding in plain sight.
That's definitely the consensus from our sources.
Right.
So our mission today is really to cut through all that noise, all the mystery.
Right.
We've analyzed the material, and we think we can tell you exactly what this announcement is probably going to be.
And not just what, but the strategy behind it.
Yes, the immediate manufacturing plan, how much these things might actually cost, and crucially, why the Model 3 and Y platforms are they're the absolute engine for the company right now.
It's not about some, revolutionary new tech this time. It's more evolutionary, high-volume scaling. And that really starts with the platforms they already have, the ones that are incredibly successful.
Okay, let's unpack this. Our sources seem ridiculously certain. Like trillion, quadrillion, gigatillion % sure, certain.
Yeah, that confident.
That the announcement is a new, more affordable iteration on the 3Y platform. So why so sure? What's the evidence?
Well, like I said, they've been laying the groundwork for a while now. Remember those earnings calls? They literally promised new, more affordable vehicle modules, plural, were coming.
Okay, yeah, I remember that phrasing, modules, plural.
Exactly. But the real tell, I think, is the recent product refresh cycle, the big one.
I see what you mean. Over the past year, they did those massive refreshes on the 3 and the Y, and they really pushed them up market, didn't they?
Significantly up market, yeah.
Like the new Model 3 Performance, for example. I mean, it's loaded with features now. Ventilated seats.
Mm-hmm.
It almost feels like it's stepping into the territory the old Model S used to occupy, luxury-wise.
Precisely. And what's so interesting about that strategically is that by pushing the main models up, they created this vacuum right underneath them.
A price gap.
A price and feature gap, yeah. By adding all those, what some sources are calling the giga tie-in features.
It's like the rear screen, ambient lighting, better sound.
Right, all that stuff. By adding those, they've basically paved the way for a new entry-level version.
A version that strategically strips out those newer, fancier editions. It's classic platform differentiation, isn't it?
Textbook.
You make your core product a bit more premium, justify its price, and then boom, introduce a simpler, cheaper version below it to grab more market share.
And the timing, especially in the U.S., seems, well, pretty perfect. This launch looks set to align with the fourth quarter, right when the U.S. EV tax credit rules are shifting again.
Making it harder for some people to get the full credit.
Exactly. So Tesla needs a new lever to pull, an organic way to keep sales volume high without relying solely on those credits. This feels like that lever.
Speaking of volume, we really have to talk about just how important the 3 and Y platforms are. The scale is just mind-boggling.
It really is. Combined production volume. We're talking, 1.5 to 2 million vehicles a year? Somewhere in that ballpark?
Yeah.
And the sources, they put this into really blunt perspective. One observed that Tesla could literally just delete the S and the X.
Wow.
And even the Cybertruck from their production lines, and it wouldn't have any truly material impact on the company's core financials.
Okay, hold on. That's a huge claim. I mean, even if the direct profit isn't there in the same way, wouldn't getting rid of the SX and Cybertruck hurt the brand, the prestige, or their ability to test out new tech before it goes mass market?
Okay, fair point. From a marketing angle or a tech transfer perspective, maybe you could argue that. But purely from an accounting and financial stability view.
Just the numbers.
Just the numbers. The sources say no, and that's the core point they were hammering home. The company's financial health. It rests almost entirely on those high-volume 3 and Y platforms. The S and X are cool, they're tech demonstrators, sure, but they just don't move the financial needle like the 3 and Y do.
Right. Okay. And the strategy for these new, cheaper versions isn't about replacing the current 3 and Y, right? They still want to sell those higher spec ones.
Not at all. They fully expect, they acknowledge the side effect. These new affordable cars will cannibalize the more expensive ones quite seriously. That's anticipated.
But that's okay.
Apparently so. The goal seems to be maintain the sales volume of the higher-end 3Y while really driving down costs on these new entry-level ones. The overall goal is to boost total annual volume by, what did the source say? Another one, 1.5, 2+ million units per year.
So it's just pure scaling, more cars,
Pure scaling, exactly.
Okay, this brings us to a really important point then, managing expectations. Because the rumor mill always goes crazy with Tesla. We need to be clear about what this announcement is almost certainly not.
Absolutely. Number one, it is not the new Roadster.
Despite the spinning hubcap tease maybe hinting at it.
Despite the tease, the sources are crystal clear. The Roadster is, like, the lowest priority for the company right now. It's cool. It's a chance for them to flex their engineering prowess. One source called it a cool side quest.
A side quest, I like that.
Yeah, but it won't meaningfully add to volume or revenue or profits anytime soon. Probably not this side of 2030, realistically.
Because the company's real brain power, its main focus, remains squarely on the big transformative stuff.
Right, autonomy, scaling up robotaxis, the whole Cybercab project, and of course Optimus. Those are the high-value plays.
Okay, and the other big thing it's not.
It's not a pricing miracle, at least not immediately. We need to forget the dream of a $30,000 or even $35,000 Tesla showing up overnight with this announcement.
But why not? If they're taking features out, simplifying it, why can't they hit that kind of price point right away?
Because the core expensive components haven't gotten cheap enough yet. Think about the battery pack, still the biggest cost, the motors, the FSD computer, which is incredibly powerful hardware, even the specific glass they use.
Okay.
You just can't trim enough cost from the existing design and manufacturing process to reach that sub $35K price. Not without fundamentally changing how the car is built.
Which perfectly sets up the distinction, doesn't it? Between this immediate product and the long-term vision. These new affordable models, they're an interim product.
Precisely, that's the key word, interim. They're designed to be built on fairly similar, slightly modified existing production lines.
So using the factories and lines they already have, mostly.
Exactly. And that's a huge strategic advantage. It means they can leverage their current infrastructure, ramp up production much faster, and hit volume targets sooner. They avoid the massive cost and, importantly, the time it takes to design and build entirely new factories for a completely new product design.
Smart. So if it's interim, built on existing lines, what's the actual price target looking like initially?
The prediction is that the starting price for these new affordable Model 3 and Y versions will land somewhere around 10%, maybe 12, maybe even 13% below the current entry-level price for each model today.
Okay, so roughly 10 to 13% cheaper than the base models right now.
Yeah, and we should remember the entry-level Model Y already starts a few $1,000s higher than the base Model 3, so the absolute dollar amount off will differ slightly.
Got it. But still, taking about 1/10 off the starting price,
yeah,
that definitely makes a difference in accessibility for a lot of people.
It absolutely does, but that's just the initial target. The medium-term goal, once they get these things rolling out in really high volume, is apparently more aggressive. They want to drive the price down further, aiming for at least 15% below the starting prices of today's models.
Okay, so an extra few percent reduction down the line.
Yeah, which reflects the kind of cost savings you can get just from massive scale and process optimization, even on existing lines.
Right. This all really sets the stage nicely for what everyone talks about as the real revolution, the next generation horizon.
That's the long game.
Yeah. That's where the truly radical cost savings are supposed to come from.
Exactly. The next gen vehicle platform, that's where they plan to use the unbox process.
A modular manufacturing system.
Yeah.
Completely different way of putting a car together.
Fundamentally different. Building cars in big sub-assemblies that come together at the end, rather than moving a single body down a long line. That's where the radical savings are supposed to finally materialize.
And when that does kick in, what kind of cost reduction are we talking about compared to today's base 3 and Y?
Well, the initial projections are for cost reductions around, say, 20 to 25% below today's entry-level prices.
Okay, so significantly more than the interim 10-15%.
Oh, yeah. And eventually, the source predicts much more than that over the long term. That's the point where a truly affordable, maybe sub $30,000 Tesla becomes a realistic possibility.
But the timeline on that, it's not immediate, right? This whole unbox process, new factories, that takes time.
A lot of time and a lot of capital, high volume production of consumer cars using this new platform. It's not expected any sooner than 2027. And maybe even, pushing towards 28.
2027, 2028, okay.
And even then, the absolute highest priority for that next-gen platform, the first thing it'll be used for at scale, is the Cybercab.
The autonomous taxi.
Yeah.
Not necessarily a car for you and me first.
Right. The Robotaxi network comes first on that platform.
Okay, so we've got this picture. Immediate announcement is likely these interim, slightly cheaper 3Y variants for quick scaling. Long-term vision is the unbox process, massive cost cuts. But that's years away, maybe 2027, 2028, starting with Cybercab.
That sums it up pretty well.
But right now, connecting all this,
Hmm.
the company has another really critical priority, one that kind of underpins all these future plans. And that's the shareholders.
That's a perfect segue, because when you start talking about the kind of huge capital investment needed for the unbox revolution.
Billions easily.
Oh, yeah. And planning product roadmaps 3, 4, 5 years out, having stability in leadership and what the company calls an adequate incentive structure, that becomes absolutely paramount. You need alignment for the long haul.
And the message coming from the company on this is, well, it's unusually strong, isn't it?
Extremely strong. Basically,
Yeah.
if you own shares, you're an owner. And voting in the upcoming meeting isn't just your right, it's framed as your duty.
A duty. Wow. They're presenting it as essential for securing that long-term strategic growth we just talked about.
Pretty much. And the dates are critical here. The annual shareholders meeting itself is November 6th. But for most shareholders, the deadline to get votes in is 11:59 p.m. Eastern Time on November 5th.
Got it. Night before the meeting.
Right. And the vote covers what they call critical measures on the ballot, specifically things related to maintaining that adequate incentive structure for our CEO and ensuring the stability of the board. It's about keeping the current strategic direction locked in.
They've definitely made voting easy, though. The sources mentioned the 3 main ways.
Yeah, super accessible. Fastest is usually online, either clicking a link in an email from your broker or using the 16-digit control number they provide at proxyvote.com.
Okay.
Or if you get paper materials mailed, there's often a QR code you can scan.
Simple enough.
And there's usually a phone option, too, using that same control number. So lots of ways to do it quickly.
Good. And speaking of the materials, did you see the little detail the source caught? A design Easter egg.
Huh. Yes, I loved that. In the shareholder voting materials insert, apparently there's a design element, kind of prominent, that subtly looks like a classic 1950s diner.
A diner. That's random.
Totally random, but it's such a Tesla thing, right? Even in these super formal, high-stakes corporate communications about voting and compensation, they still sneak in a bit of personality, a little visual wink.
It's definitely memorable. It kind of reminds you there's a specific, sometimes quirky, culture-driving things, even when dealing with serious boardroom stuff.
Exactly.
Okay, so let's zoom out. We've covered a lot. What's the core takeaway for you, the listener, from this whole deep dive?
I think the main takeaway is seeing this really clever two-pronged strategy in action. First prong, they're using smart platform differentiation. They push the existing 3 and Y upmarket with those fancy refreshes.
Creating the space below.
Right. Creating space to justify introducing these new, slightly stripped-down entry-level versions. And crucially, these are built on modified existing lines. That lets them scale volume really fast right now and get that immediate 10 to 13% price reduction.
So prong 1 is maximizing the now, using current assets for immediate growth.
Exactly. Maximize immediate infrastructure, grab volume quickly. But then there's prong 2, simultaneously laying all the groundwork for the radical long-term change.
The unbox manufacturing revolution.
Yes. The thing that will finally deliver those truly low-cost consumer vehicles, but that's further out, 2027, 2028, and beyond. So it's this balance. Accelerate volume growth today with an interim step while still shooting for that revolutionary cost structure down the road.
Makes sense. Immediate gains meet long-term transformation.
That seems to be the plan.
Okay, so here's a final thought for you to chew on. Something that really ties a lot of these threads together, especially the focus on the future.
Okay.
That really important corporate high-stakes message we just talked about shareholder duty, voting, securing the company's future stability. A mission-critical message. Who delivered it to the world recently?
Ah, right. It was delivered by the Optimus humanoid robot. That decision, wow, it really hammers home what the sources observed, doesn't it? That autonomy, robotaxis, and the Optimus project itself hold this just massive, overwhelming priority inside the company.
More priority than anything else.
It seems like it over every other side project, even things consumers are really excited about, like that new Roadster. They chose their autonomous future embodied by Optimus, to deliver their most important corporate message about stability and growth.
The messenger is the message.
You got it. That tells you where their heads are really at for the long term.
Subscribe for more smart money ideas every week.